Hey, good morning, everybody. It's Hammer. Today is Thursday, December 18th, 2025. We are rolling into the end of the year. Thank you for joining me. I am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei. I'm going to change the audio here. Okay, good. Good to know. It's not working right with that microphone. Okay. Well, this is not the best sound because it's using the monitors. But anyway, well, thanks for letting me know, y'all. You guys know the routine that you can sign up down there at that. I'm going to get back on track here. If you are watching the replay, do me a favor and give me a hashtag replay in the comments. Don't forget to smash that like button, maybe tag an originator, friend, share this post in the group. Let's say hi to live folks, and then we'll jump in and get started. Who do we got this morning? We've got Rob Stewart, good morning. Thank you for letting me know that the audio is back. Megan Bissell. No, is it Narida? Claudio? Ron Siegel. This is better sound than the other mic. Okay, well, that's good to know. Audio's back, and I'll figure it out. I'll play with it. Thomas Wolf, good morning. Anyway, if y'all are here, great to see you. Again, thanks for joining me. I'm going to go ahead and let's jump into the good stuff. What I'm actually going to do is let me bring up Gmail. I want to give you guys. Here we are. Let me share my screen. All right. So remember, if you would like to sign up for this email to your inbox each and every weekday morning, I'll throw the link down on the bottom. It's absolutely free to get this to your inbox. But here we go. So if we take a look at what I am suggesting that we do as far as locking or floating here, I would lock anything closing in the next couple of weeks. I would also lock anything closing in the next 30 days. So basically, even heading into the beginning of January, unless you want to wait and see what the labor market data in January looks like. That's the only reason that I would consider floating, and then you're committing to floating over the next couple of weeks. And I'll tell you why I'm locking there. So before I do, I'm going to throw it up on the screen. Make sure you go ahead and sign up for my Success Plan Workshop. I'll tell you more about it in a minute. We're going to come back to that, but I'm going to leave the sign up link down here. And actually, I will even put it in the comments in the chat. Let me post the link in the chat for anywhere that it does post the link in the chat. There you go. So I know it doesn't post to all channels, but it's there. So anyway, now we got that on there. Let's go ahead. First things first, we'll do a quick recap of yesterday. Mortgage bonds basically did not move yesterday. They were pretty damn boring. Let me adjust this, and I will put this up on the screen so we can take a look here together. So taking a look for the two-day chart, yesterday we had a little bit of an improvement heading into pricing. And then we were just flat on the day. There was really not much of a move at all. When you take a look at rate sheets and how that actually equates to rate sheet pricing, if we take a look here using Mortgage News Daily as a reference point, you will see that there was no change from Tuesday and Wednesday. Things were basically the same here around 6.27, a little bit better than 6.29. Not quite as good as the 6.26 that we saw on the 11th. This is basically about the best levels that we'll see. Arguably, remember we had 6.13 for like 5 seconds right before the last Fed meeting. If we take a look here, hold on, let me adjust this so you guys are seeing what I see. I'll bring this down a little bit, get rid of that. Okay, so taking a look here, let's move this over like this. So arguably, we had our best rates right about there. We should be coming down a little bit. When you take a look at mortgage-backed securities, this morning they are up about 12 basis points on the morning. The inflation data came in a little bit better than expected. It was the CPI, core consumer price index, the headline number. It was expected to be 2.7. Actually, Wall Street Journal showed it expecting to be 3.0. Consumer price index rose to 2.7 in November. That's the headline number, slowing from 3% in September. So it came down, and that's quite a bit coming down. Actually, expectations were for a 3.0 in core and 3.1 in headline. So that's quite a bit better than what was expected here. The core rate, rose 2.6% instead of 3%. That's a big improvement over what was expected. But yet we're not seeing a huge reaction in mortgage-backed securities. And that's what I warned you about yesterday, why I wasn't big on floating into this number. It's really not a huge deal being up 11 basis points. And we're testing that 101.28 level, that 101.28. We've seen this 101.28 level hold up in the past. Let me see if we roll this over here. So we can kind of draw this line like this, right? And the only time that we broke above it was here once in October, and it was only for a single day. Only for a single day. The other times that we've gotten there, let's take a look at where pricing was on those days, was October 27th and December 3rd. So if we look at like October 27th, where was pricing then? 6.19. If we look at December 3rd, let's get to December 3rd. It was only 6.23. So it's likely that we're going to see that again, that 6.23-ish kind of mark. We were at 6.27 yesterday, probably going to get down to about 6.22, 6.23. And that's going to be the best that we're likely to see this year. I don't think we're going to see mortgage bonds that want to break above this 101.28 level. There's nothing there to push it to happen, right? So I don't think we're going to see that happen. Take a look at the 10-year Treasury yield, 4.11. That's wonderful. Well below the 4.18 mark we've been looking at, or below 4.20 if you want to use that one. Arguably, we have resistance. Remember, we want to see the 10-year Treasury yield go down. Down is better for the yield. We're going, see this blue line? That's a 25-day moving average. The 25-day moving average does not give a lot of technical resistance or support when we talk about mortgage-backed securities. But when we get to that 10-year, it really does. If we do break below it, we're going to see the 50-day moving average. That's at 4.08, and that's probably the best we would get to. So we could arguably see a little bit of improvement in the 10-year. But when you look at all these changes this morning, no change whatsoever in this having an effect on markets believing that we will see a January Fed rate cut. Even though inflation came in lower than expected, even though the labor market data the other day showed higher unemployment, and arguably, if you dug deeper, you could get through the jobs that were created to see a lot of weakness. But we're not seeing that really translate to markets pushing down bond yields, pushing up mortgage-backed securities, or increasing bets on a Fed rate cut. So because of all that, I would absolutely, I'm going to go back to the email here, and let me just make this bigger and pull this over. Hold on a minute, and I'll get this where I want it here. Because of that, we're really not seeing it. So again, you can, I got the workshop plan. I wanted to give you guys the code for the email too. So this is the email that I send out every morning. Recap of yesterday. Yesterday saw mortgage bonds hold steady through the day. Hold on, I got to make it a little bigger so we can read that. Not only as they started out, but the same as the day before. There was no economic data. The headlines were pretty stale. The main talk was about today's CPI inflation data, rate outlook for today, not locking in and floating, but the rate outlook, pricing. Rate sheets, I should say pricing outlook, right? Rate sheets today will start the day a bit better than yesterday, also a bit better than Tuesday. I told you about how inflation came in, so we're not going to reread that. Mortgage-backed securities hit a high of 101.34, but as I write this, sat at 101.28, and I used an M-dash, so I was joking around. Did you know, I believe the latest version, 5.1 of ChatGPT, they pulled out the use of the M-dash because it was so rampant, right? We've only seen MBS break this level once. I showed you that. That was over in October, and only for a single day. So looking, on rate outlook for the next 15 days, I'd be locking loans. When I write this, I always put the lock float right there and then the rate outlook. If you have any loans that floated into the data today, they must have been willing to roll the dice. We talked about locking into this. I still would have locked. You didn't leave much on the table if you did. I mean, we're talking a couple of basis points in rebate pricing. Not a big difference at all. And if we take a look and see, it's really lock it and sleep easy is where I would go with this one. And then, the 15 to 30 day rate outlook, I've been saying to cautiously float these loans up till now, and I'm moving into a lock stance. If it's closing in December, that's the next 15 days or so, I'd absolutely lock. If it's closing the first couple weeks in January, we could argue to wait until the labor market data because it could give some improvement. But rate sheets are just too good to take that chance right now. I would lock. If I had anything closing in the next 30 days, today's a great day to lock them. That's just how I feel about it. Anything's got more time, we don't have to worry about. We've seen these rates before. We'll see them again. So we don't have to worry about that extra longer protection for those. As far as the technicals, I've already hit those a couple of times, and we've kind of dialed that in. So that's what's going on. There's really, you've got some other stuff going on in the headlines, but nothing that affects mortgage rates. I don't want to get into politics and Trump and everything else, so nothing to really get into about that. It's otherwise really not anything that we want to get excited about. This was the big report, and then it'll be quiet through basically the rest of the year now. We're not going to see anything that really moves anything. So as far as the vision plan workshop, let me go ahead. I am going to throw that back on the screen. I want to tell you about that. So here's the deal, right? I don't know about you guys. My 25 was not what I wanted it to be for the company. And my main reason for that, when I look back, is because I didn't have a clear vision. And, it's so easy to say that, but so hard to fix that. Every year at the end of the year, I always do my vision planning workshop, and I do the exercises for myself. I can say that I didn't have the 25 I wanted. And if you can say that as well, you've really got to go ahead and hop on this. So what we do is a 3-part process. It's a 3-hour workshop, and I go over, dissecting 25. We don't spend a lot of time on it, but you want to just look back. We look back at what was working, what maybe didn't work, what we would do different, how we feel about it, and then we put it to bed. I feel like it's a really important process to do that if you're going to look to move forward. Now, in what we do next is we create what I call your success story. Is if 2026 already happened and you're looking back on it and talking about all of your wins, all of the things that have happened. Now, I have built an AI engine, an AI agent or GPT, whatever you want to call it, to help with this process. I'm not a big AI person, but for things like this is where AI shines. It's going to interview you while you're on the workshop. You're going to go ahead and just give it some answers, and it's going to ask you a bunch of questions on things and talk about things, and you don't have to create this from scratch. It's going to give you those ideas. It's going to kind of suggest things, and it's going to create at the end your success story. And the reason that's so key is that's what you're going to continue to look at as 26 goes on, so that you can have your vision and stick to your vision about what's happening. And then last but not least, the third component, we spend a lot of time on the strategies and tactics. What's going to get you there? What's going to help you to actually bring about and manifest this success story that you've created. And we're going to go deeper on the, like I said, the true strategy, which is the bigger picture, and then the tactics within that strategy, on what you're going to do so you have an actual plan on heading into it. So I spend a lot of time on this. I don't make a lot of money on this. I do this because I think it's so valuable. When I don't do it myself, I have failed, like 2025. And that's why I want you guys to do it. It is discounted today, tomorrow, so it'll continue to be discounted. It's only $67. The price will go up next week. It's only $67. Listen, if $67 is so tight that you can't swing it, I want you to send me an email. And if you tell me that, I'll give it to you for free. If somebody can't swing the $67 and they want to be on this, you send me an email. I will give it to you for free because I think this is so valuable and you need it more than anybody else. So we'll call it a scholarship. But otherwise, I think most people can swing $67 to improve their year. It's going to be the best investment you make in yourself. Even if you've got a business plan, even if you've got your goals set, the way that we do this, the way I do this, and I'm going to have my man Scott Groves from Consolidated Coaching is also going to be on with me this year to add some energy, help with the tactics, the strategies, and bring that in. He's really going to bring it home for us. So you've got to get on this one. If you guys have any questions, let me know. And yep, don't worry, Ron. We take a pee break in the middle, so you're good. Good morning, James Mahan, Nicole Semerad, 6'7". Yes, I can tell those of y'all that have kids. But anyone have any questions, whether it's about the workshop or anything else, let me know. And again, I'll throw that link up in the chat one more time, just because I feel so strongly about it. I'm going to be pimping it for a while. Again, it's not a money play. We make a lot more money on other products. I do this because I feel it's so, so, so important. So anyway, hope you all have a fantastic one. I am leaving in a couple hours. We're going to Chucktown, Charleston, South Carolina, and we'll be spending the weekend there. My wife and I will go into an Airbnb and just chilling. So I will be here tomorrow. I'll come to you tomorrow. I'm going to keep the show short, and we are, come to you from Charleston, and we'll talk about, what's different. There's really nothing happening after today for tomorrow, so you won't see anything. Ron Siegel said the next big market moving day is January 9th. Is that when the BLS jobs report comes out again? BLS jobs data release dates. Did they push it back to the 9th? Is that when it was bumped to? Yeah. So that's what Ron is referencing, and he's absolutely correct. We've basically got about 3 weeks now. 1, 2. Yeah, we got about 3 weeks before there's going to be anything relevant happening. So it's going to be real quiet. I think in that time frame, locking makes a lot of sense for a lot of loans. But if you do cautiously float, we say cautiously, but you can float. It's not going to be a big deal. But loans closing near term, I would absolutely be locking. I think today is going to be some of the best pricing you see. So keep that in mind. All right, my friends, I'll see you tomorrow. Have a great one. Bye-bye.